Hi guys, welcome back to another episode on the Rebecca's Finance Tutorials YouTube channel. So you might have noticed that recently I changed the name from Miss Finance to Rebecca's Finance Tutorials because I thought, well, so many of you already know that my name is Rebecca, so I've changed it to Rebecca's Finance Tutorials. And excuse the squeaky chair, I've got a new chair but it squeaks even worse than the last one. So what I'm going to talk to you about today is double entry and the balance sheet. So I get a heck of a lot of questions on the YouTube channel and also on the TikTok channel now regarding tutoring and, knowledge at AAT level 3 and ICB level 2, just regarding double entry and what that sort of looks like and why it appears where it does on the balance sheet. So when I was trying to figure out double entry when I was in your position all those years back, and even actually in the first 3 to 5 years, I constantly forgot double entry and had to keep going back to it. I would always start at the balance sheet side of things to start working out where things should go. So we're going to start with a really easy one at the very top of the balance sheet, which is trade debtors or trade receivables. Now, what trade debtors is, it is where you've made a sale to a customer and that customer hasn't yet paid for those goods yet. So it's basically where you're making sales on credit, if you will. So in that, if we were to look at what we call a trade debtors summary or a trade receivables summary, then what we're basically looking at is the summary of all of the income that is owed to us by client. So if you're ever using a system like Xero or QuickBooks or FreeAgent or FreshBooks, whatever it is, then you've got the option to run this trade debtors summary. Now, you can also run what we call a trade debtors detail summary, which is going to give you a listing of every invoice by every customer in order. So again, you can always run that if you want to see the detail behind a summary. But how does the information actually get into there in the first place? So we've got a double entry like we would do with all accounting records. So what it's going to be is it's going to be a credit to sales in the income statement and then a debit to trade debtors. And the reason why it's a debit to trade debtors is because if we were to look at the balance sheet, we would see that debtors is actually usually a positive balance. And it's because it's basically an asset. It's an asset of money that's owed to us as a sole trader or as a limited company. So again, we're going to be crediting sales and we're going to be debiting trade debtors. Now, what actually happens then when a customer makes a payment to us? Well, it's really, really easy. What's going to happen is our bank balance is going to go up, and we know that the bank sits on the balance sheet as, again, an asset under cash and cash in hand a lot of the time. So if that's going to go up, then the total amount that we've got sat on trade debtors is going to go down. So our credit is going to be going to trade debtors when we're receiving income regarding a sale that has been on credit. So again, those four, we're going to be crediting sales to record the initial sale. We're going to be debiting trade debtors if that was on credit and we haven't yet received the money for it. Then when the payment is made by the customer, it's going to be a debit to bank and a credit to trade debtors. So just with these things in mind then, if we were to look at items such as, sales returns or bad debt, what do? So a sales return might be where you've had to refund a customer because maybe a goods item was damaged in transit, for example. So what we would do there is it's quite similar to when we're receiving a payment and we're recording that payment. And what we would do is we would credit trade debtors. So we're going to reduce the balance owed by that customer, and we're going to debit sales returns on the income statement or the profit or loss statement. So very, very simple. So when we look at the income statement, we've got this debit balance against sales returns. Sometimes there isn't a nominal actually for sales returns and it would just be debited to sales to reduce total sales. So you might see that also, but we would be crediting trade debtors to reduce the total balance owed by that customer to us. So bad debt works really similarly. So where we've got bad debt, where we know that that client is never going to pay and maybe they've gone into liquidation, for example, and we know we're not going to get it back and it's been 6 months. So what we would do is we would again credit trade debtors on the balance sheet to reduce the amount being shown in trade debtors, and we would debit bad debt in the income statement. So that is bad debt that's actually being written off. So it would be debit bad debt written off. So really, really simple. Now you might be asking then, well, what is it that we do where we've got an element of VAT? Well, don't worry, again, simple process, take it from the top. So if we've got a sales invoice that has VAT on it, we're going to be crediting sales for the net amount of that invoice. We're going to be crediting the VAT control account for the VAT bit of it, because when we've registered for VAT, we're basically collecting VAT on behalf of HMRC, and then we have to pay it over to HMRC. So for all intents and purposes, if we only have VAT on a sales element, then that's going to show as a liability in our balance sheet, because that money needs to go out. Similar to creditors, where that's going to be a liability on our balance sheet because it's money that we owe out of the business. So the VAT element of that sales invoice is going to be a credit to the VAT control account. And then the gross amount of that sales invoice is going to go to trade debtors. So what happens then when we receive the money from the customer? It's going to be the same process as where there's no VAT. So we're simply going to debit the bank for the money that's been received, and that's going to be the gross amount of the invoice, because remember, they're paying the gross amount there, not the net amount. And then we're going to credit trade debtors with the gross amount. So it'd be debit bank because your bank's going up, and it's going to be a credit to trade debtors because that's going down. If you've got a sales returns item that's got VAT on, all we're going to do is we're going to credit trade debtors with the gross amount of the sales credit note. The VAT element that we would have charged as a credit originally to the VAT control account, we're going to debit the VAT control account to contra that original entry. And then the net amount of the sales credit note is going to go again to either sales in the income statement or to sales returns. So again, taking it back, we're going to have a credit to trade debtors, which is going to be the gross amount of the sales credit note. We're going to have a debit to the VAT control account for the VAT element, and then the net amount is going to be a debit to either sales returns or sales in the income statement. So bad debt, again very similar when we've got VAT. So it's going to be a credit to trade debtors of the gross amount of the bad debt in order to write that off, so that our trade debtors is going down. And then we're going to have a debit to the VAT control account for the bad debt write-off, because we're going to be reducing basically how much VAT we owe to HMRC. Because originally, when we made that sale, we would have paid that VAT over to HMRC if we're on what we call an accrual method, but we're not going to go into that. So basically, we're going to debit the VAT control account to reduce how much we owe to HMRC, and then we're going to debit the net amount to bad debt write-off on the income statement. So just when it comes to debits and credits, and it comes to the trade debtors, bad debt, sales returns, just keep going through the workings and keep doing the double entry, and make sure you try as many questions as you can to get your head around it. But the more you do, the easier that it gets. So if you've got any questions around trade debtors, sales returns, bad debt, then just fire away in the comment section. But I hope that helps, and if it did, then I'd be really appreciative if you gave the video a thumbs up, because it does help the channel grow and it helps get these videos out to other people who could use them. And otherwise, I'll catch you on the next one.